I think in any M&A environment, confidence is a great driver of activity, and we just haven't had the confidence we need, I think, to see the business community really go out and be aggressive as we thought they might be. Interest rates are low. We do have a situation where the debt markets are pretty healthy. We've got private equity with plenty of availability, and they have been active, and corporate balance sheets are strong. So, I remain bullish that we will start to see more of an uptick. And the GDP forecast, while modest, is better than what we're seeing in the rest of the world, obviously.
So divestitures are a critical piece of today's market. They represent almost 43% of year-to-date value. And when you look at it on a volume perspective, it's about a third of all transactions in the market. So they're really driving a big piece of the market today. There's increased shareholder pressure to force companies to extract value from their businesses today, particularly in a slow growth environment. So companies are reevaluating their portfolios, their different business segments, figuring out which segments are core and non-core, which segments are maybe underinvested, have lower growth and lower margins. And they're thinking about shedding some of those assets. And that's really driving the activity on the divestiture side.
Yeah, one of the dynamics that I'm seeing from a buyer side, especially from a PE, is the decision that many strategics are making with regard to what type of effort, what type of preparation they want to put in to the divestiture process. If you think about a divestiture it's a complicated issue, it's a complicated transaction because of all the carve-out issues, be it the benefit plans, the IT environment, the financial statements, getting that whole world and actually a business that can run seamlessly day one is not easy. And if you think about sort of that effort and who's going to pay for that effort, who's going to accomplish that effort, historically it's always been done by the buyer. The buyer has gone in and made assessments through diligence and a lot of industry knowledge, have come up with a 100-day plan you've heard about and all that. But a lot of that work was done by the buyer and reflected in the price. What we've seen is what's coming is sellers are doing a lot of that work now. Certain industries that are in a state of transition, be it healthcare, be it technology, financial services. 10 years ago, very little private equity activity, but today it is a key area. Another area around commodities or oil and gas, we're seeing that. So I think the common theme around the private equity industry play is industries that are in transition. Where we're seeing money from Asia, money from Latin America is in things like agriculture in the U.S., infrastructure, the oil and gas. As those things are changing, the foreign buyers are really drawn to the U.S. into those markets from a growth industry, but also the confidence in the U.S. marketplace.